This week, the market is telling two completely different stories. It's really a tale of two titans clashing. Over in Japan, you've got this incredible wave of political optimism that could spark a massive bull run. But then you look at the US, and it's like a wall of worry is being built brick by brick with all this new anxiety. So the big question is, which one wins? Hope or fear? Okay, so let's break this down, because you can see the split right here. On one side, Japan. The promise of bold new economic policies is getting investors really, really excited. And on the other side, the US is just bracing for what's going to be a super high-stakes earnings season. And yeah, the mood is a lot more nervous. And this isn't just theory, right? This conflict has real teeth. The fear is palpable. I mean, just look at the Nikkei's nearly 700-point drop at the end of the week. That's a direct knee-jerk reaction to all the nervous signals coming out of the US.
But, and this is where it gets interesting, here's the twist. In the middle of that sell-off, foreign investors didn't run for the hills. They doubled down. They poured over 1 trillion yen into Japanese stocks. They saw the global jitters and basically said, nope, we're not worried about that.
And this right here, this is the heart of the puzzle. You've got global sentiment, according to CNN's Fear and Greed Index, literally screaming extreme fear. And yet, at the exact same time, you have big, smart money making this massive contrarian bet on Japan. So what is really going on here? All right, let's dive into that first story, the really powerful bull case that's building in Japan. It all comes down to something investors are calling the Takaichi trade. And believe me, it is a huge deal. The market is absolutely buzzing about this because the new administration's playbook is hitting all the right notes for investors who love growth. We're talking about bold government spending, keeping the easy money flowing from the central bank, and huge investments in defense and infrastructure. And for anyone who's been around for a while, this has echoes of the early days of Abenomics, which, as you'll remember, was a massive catalyst for the Japanese market. And our strategist, Beta, really hit the nail on the head with this one. That trillion yen inflow, that's not just passive money following an index. No way. It's an active, powerful bet that this new political direction is for real and that it's actually going to deliver. The money is speaking loud and clear. And if you're looking at the charts, the technicals actually back this up. That scary-looking sell-off on Friday, well, it looks less like a breakdown and more like a healthy pause, a chance to catch its breath. The index held a really crucial support level, that 25-day moving average, which is a strong signal that the underlying uptrend is still very much intact. Okay, now let's flip the coin and pivot to the other side of this story, where the mood is, well, it's completely different. Because in the US, it's not about political hope. Oh no, it's all about corporate reality and this growing wall of worry that's just becoming impossible to ignore. And here's where it gets a little strange. The S&P 500 is still this floating around its all-time highs. You'd think everything would be calm, right? But underneath the surface, anxiety is just surging. The VIX, which is Wall Street's fear index, has spiked to levels we haven't seen in 6 months. That's a huge disconnect. And what's pouring gasoline on this fire of anxiety is that with key government data like the inflation report delayed, there's a huge information vacuum. So what fills it? Corporate earnings. Right now, they are the only real-time window we have into the health of the US economy. They're the only game in town. So what that means is this week's earnings calendar isn't just about individual stocks anymore. Nope. It's basically a series of high-stakes tests for the entire market. What Netflix says about subscribers, what 3M says about industrial demand, and especially what guys like Lam Research and Intel signal about chip demand, each report is another critical piece of this giant economic puzzle. And that right there, that brings us to the battleground, the one place where these two massive stories, Japan's hope and America's fear, collide head-on. And that battleground is AI semiconductors. This is where the future of the market is being fought right now. Our analyst Guy put it perfectly. This isn't just about computer chips anymore. This one sector has become the intersection of everything that matters. The insane growth of AI, the geopolitical tug-of-war between the US and China, and the overall health of the entire global economy. It all comes together right here. And look, if you need proof that this AI boom is the real deal, just look at TSMC, the most important chipmaker on the planet. They just posted a staggering 39% profit growth and jacked up their forecast for 2025, saying AI demand is, and I'm quoting them here, stronger than we imagined. That is just incredible. This trend directly benefits a key player in this space, Tokyo Electron. This Japanese company basically has a monopoly. We're talking over 90% market share on a piece of equipment that is absolutely critical for making the most advanced AI chips. As AI gets more powerful, their position just gets stronger and stronger. Okay, so this is the push and pull you have to understand for this entire sector. You have this incredible light, which is the explosive long-term demand from AI driving everything forward. But there's always this shadow looming in the background, the geopolitical risk from US-China tensions and export controls. It's a constant source of uncertainty that you just can't ignore.
So the big question is, how do you play this? We've got Japan's optimism clashing head-on with America's anxiety. How do we turn all of this analysis into an actual, actionable strategy for the week ahead? Well, we think the smartest approach is a core satellite strategy. Your core, your foundation, should be built around those strong long-term stories we talked about. Japanese companies that are going to benefit from the new policies, and the elite semiconductor firms that are powering this whole AI revolution. Then you use a smaller satellite portion of your portfolio for more nimble short-term trades to play the volatility around those US earnings reports. So, just to give you some concrete ideas, here are a few names that really fit this strategy perfectly. You've got NVIDIA as the cornerstone AI play. Then you have these high-quality Japanese names like Toyota and the financial giant MUFG, both set to benefit from what's happening domestically. And of course, Tokyo Electron, a key enabler of the entire AI world. Each one plays a very specific role in capturing the themes we've just covered. So at the end of the day, that's what this market boils down to. It leaves every single one of us with a critical choice to make. As Japan's hope and America's fear continue to battle it out for control, the real question for you is this. Are you going to lean into the long-term story, or are you going to trade the short-term noise? That's the decision that's going to define this week.